Hi, this is Ian Coleman and this is this week's video analysis for the FX majors and the dollar index going into the week 10th of December 2018. Now, we've seen a lot of volatility in the markets. We're expecting that to continue this week. We've got a lot of data releases. We've got the much anticipated Brexit government vote, UK government vote on Brexit plan on Tuesday. We've also got the UK employment figures on Tuesday. Wednesday, we've got the CPI figures, US CPI inflationary figures. And then on Thursday, we've got the ECB interest rate decision. So a lot of potential market moving data releases this week. And we're expecting that to cause a lot of volatility in the FX majors. So we're going to break down the time frames. I'm going to start with this weekly chart, dollar index weekly chart. We've got a bearish Elliott wave count to the downside. We now believe that we're completing a bullish count to the upside. So this will be 1, 2, 3, 4, and then up in 5. Mixed volatile trading for the last 16 weeks. Has caused a wedge formation. So this is an ending wedge formation. So the market basically winds up, buying dips, and then has an impulse break to the downside. On a break of last week's low, the measured move target is going to be around about 93.89. However, we have got some scope for some upside pressure. 97.86 is a 61.8% Fibonacci pullback level. We've also got trendline resistance coming in around about 97.92. If we go to a shorter time frame, this is only the daily chart, we can see mixed trading for the last 9 days. It's caused a corrective channel formation. Even last week's non-farm payroll on Friday didn't really move the market that much. An AB equals CD formation on a breakout of last week's high is at 97.90 or 97.89. And that's extremely close to this Fibonacci pullback level. So we're expecting the upside to be limited next week. But the immediate bias is probably to buy into dollar dips, but that's only on an intraday basis. And we're looking for this dollar strength to peter out once we get towards that sort of 98 the figure area. So reflecting that back onto the FX majors, I'm just going to break down time frames first, because I believe it's quite beneficial to look at these higher time frames. Opposite to the dollar index, 5-wave count to the downside. We posted a bullish engulfing candle on the week 12th of November. We've since seen sideways price action in this major currency pair. If we go to the daily chart, we can see the trend of lower highs coming in at 114.28. We've got daily bespoke resistance at 114.64. So even if we do see a break to the upside, we're expecting it to be limited to start with in euro dollar. This is also an area that's been quite pivotal. If we go to the 4-hour chart, we believe we're forming a reverse head and shoulders pattern. We'd normally say that a break to the upside and we'll see an impulse rally, but like I said, we've got bespoke resistance at 114.60. We've also got it at 114.25, which is close to the trend of lower highs. Excuse me. Excuse me, took a bit of a cough. So the upside could be limited at the beginning of next week. And in fact, if we look to a full AB CD formation, so this being A to B, and then projecting it from last week's high, move that over slightly, we could form a double bottom formation. So this being the previous low, and then an ABCD formation taking us back down to 112.15. So like I said, the medium term bias is still to the upside, potentially with a double bottom formation. But the intraday bias, when you think about the dollar index and buying those dollar dips, must be to sell into euro dollar strength, at least for the time being. And like I said, 114.25, 114.29 being an area that's reasonable resistance, should we say, going into next week. We've got to have a lot of caution here. We believe we're coming into the end of that dollar rally. So, these are only going to be what we now believe to be corrective moves lower, and the medium-term bias sort of flipping to the upside. Sterling dollar, the one to watch. Let's have a look at this time frame. The daily chart, mixed volatile price action, looks to be forming. Excuse me. Excuse me. Looks to be forming an ending wedge pattern. Now, a break of Friday's high, and the measured move target is actually up here, which is 131.70-ish. We've got bespoke resistance at 129.28 and at 131.32. So our bias, and it's obviously hard to call at the moment, but the chart formation is suggesting that we're going to see stronger sterling next week. If we go to this time frame, the 4-hour chart, we can just see that levels under 127.30 are finding buyers, but we're just consolidating with the RSI, the Relative Strength Index, trading close to 50. We're expecting that to continue obviously on Monday until we get that vote on Tuesday. But our bias is for a break to the upside. Dollar Swiss, medium term we are short in this currency cross. We've got an inverted hammer on the weekly chart. We've got some bespoke support located at 98.40 at the beginning of next week. If we do go to the intraday chart, we have broken this channel formation to the downside. However, it's not impulsive. I think that we are going to continue to see mixed and volatile trading. Like I said, we've got bespoke support here, bespoke resistance at 99.62. So really the call going into next week is going to be to buy dollar dips or to sell dollar strength in dollar Swiss, and we're expecting price action to remain pretty mixed and volatile. Dollar yen, we can see here on the weekly chart, we had back in September 2017, we had a prolonged period of consolidation. We look to be mirroring that sort of price action over here, so we're expecting mixed trading to continue in dollar yen. We have got an evening doji star posted on the weekly chart, so as long as the high from this formation holds, excuse me, which is at 114.55, then the bias is still to the downside, but I believe we're going to see quite a prolonged period of consolidation here. If we go to the 8-hour chart, we had this wedge breakout. We expected an impulse move to the downside. However, it was short-lived. We completed 5 waves. We then came higher. This looks like a 3-wave correction, but again, this downside move is anything but impulsive. Going into next week, we've got trendline resistance at 113.04. We've got bespoke resistance at 113.08. But to the downside, we've got bespoke support at 112.52. So, mixed volatile trading again. Yen crosses haven't really moved lower with stocks. They just seem to be holding out, and I think there's better currency pairs to focus on next week than dollar yen, i.e. sterling dollar. If we go to dollar CAD, reverse trendline resistance, even though we poked through, it has held 133.88. We've closed below it. If we go to this time frame, we can see a 5-wave pattern to the upside. So 1, 2, 3, 4, 5. Again, I think we're going to see mixed and volatile price action. If we break this formation to the downside, then we've got bespoke support here at 131.65, and that's an area that's been pivotal. Swing lows here, swing highs over here. So I think that could hit that level and then come back to retest the breakout level. Beginning of next week, we've got trendline resistance at 134.28. So even though our bias for dollar CAD has flipped to the upside, again with uncertainty on where this dollar's going at the moment, I think we could see a prolonged period of consolidation in this currency pair. Excuse me again. Aussie dollar, a wedge formation. It's broken to the downside. Reverse trendline resistance is coming in at 72.71. We've got bespoke resistance at 72.71. So our immediate call for next week is to sell into strength in Aussie dollar. However, we've got this channel support that's coming in at 71.85, and we've got Ishimoku support, Ishimoku cloud support, 71.70. So similar, excuse me, to dollar CAD. We're expecting some range trading in Aussie dollar at the beginning of next week, or even towards the end of next week. Euro sterling, we tried to get short at 89.69 on Friday for the intraday call, and we made it at 89.67 high, so we didn't get triggered. We believe this is a wedge pattern. Again, could stay within this wedge on Monday, an impulse break to the downside, and the measured move target's 88.11, and that would obviously indicate sterling strength, which also is a reflection of that potential wedge breakout on sterling dollar. So again, it's sort of just highlighting that bias for stronger sterling going into next week. And in fact, if we look to this chart, we've got a channel breakout. This is the weekly chart. As long as that trend line holds 89.77, then the medium term bias is still to the downside. We're trading inside the weekly Ishimoku cloud, and that often causes a lot of volatility in day trading. So our bias at the moment is to for a break to the downside, but it's only a mild bias. We can't predict what the Brexit vote's going to be, but these chart formations do give a bias for sterling strength. Aussie dollar, euro yen. Again, just a period of consolidation. We're just moving around this 50 level on the RSI on the 8-hour chart. If we go to this time frame, then we've seen mixed and volatile trading for 42 days. It looks like a triangle formation. After an initial move to the downside, it has a bias to break again to the downside. The measured move target will be 124.10. To the upside, we've got bespoke resistance at 128.98 and 129.31. The last being pretty close to trendline resistance, which at the beginning of next week is going to be around about 129.65. So at the moment, the call is really to sell into rallies, as long as we don't breach this trendline resistance, and we'll look for a medium term move down towards 124.10. Okay, good luck this week. I do apologise for the coughing and spluttering through this video presentation. All the best of luck, and we'll speak to you again next week. Many thanks.